9 a.m. in Shanghai, Shenzhen, here in Hong Kong. You're watching The China Show. I'm Yvonne with Avril Hong.
We're counting down to the open of markets in mainland China. Our top stories: Asian stocks under pressure after recording their best quarter in 17 years as part of a global rally fueled by AI. US chip stocks providing a tailwind following their best 3-month period on record. The yen approaches 163 to the dollar, with traders watching for the Japanese government's next red line for intervention. Also on the program, Nike says it's working on a comprehensive reset in China, where it faces stiff competition from homegrown players, getting better traction with local customers. And President Xi Jinping set to speak at a Communist Party event next hour, set to highlight China's technological advances and efforts to alleviate poverty.
Yeah, as we count down to that speech from Chinese President there, Xi Jinping, speaking at this 105-year anniversary of the founding of the CCP. Certainly, we're kicking off with this new quarter here on a pretty positive sort of note, Avril, right? You continue to see tech stocks outperform once again. And when it comes to the yen, right, we're still kind of contemplating whether we're going to see that intervention and really where those new red lines are going to be now.
Yep, it was a good quarter, all things considered, for Asia stocks. You take a look at how it has best quarter, right, in 17 years. We saw the dollar rebound as well. But today's market action is quite interesting. As we take a look at how it's been faring in the early goings, Japan is actually outpacing the gains that we're seeing in the Kospi. We did get Tankan data. There was a big beat for large manufacturers, sentiment among them. And maybe this adds to signs of that bit of rotation that's coming through in the markets, especially given how far South Korea stocks have come. On a day where, mind you, we got an exports print out of South Korea that was pretty good, all things considered. Take a look as well what you're seeing on the TAIEX, 2.5% climb there. So maybe speaks further, again, to what we're seeing in that bit of rotation in Asia, despite the tech undercurrent. Take a look at what we're seeing on the macro backdrop. Of course, we have been seeing the yen hitting the fresh 40-year low against the greenback. Today, the Tankan data supporting the case for the BOJ to hike, maybe further pressure coming for JGBs at a time where on the front end, we've been seeing yields pick up for treasuries, right? Following on from that JOLTS data, which was bigger than expected in terms of U.S. jobs openings. And then that is the setup, of course, for the U.S. jobs report later in the week. Take a look as well at what we're seeing for China. Of course, Hong Kong markets are shut today, but for the mainland, we still have the Chinex, right? Just a day ago, clocking its best performance in 2 weeks. Maybe some headwinds coming for Cambricon, given the warnings, the guidance there, what this materials cost is going to mean for earnings overall. Let's bring in Bloomberg M Life strategist Mark Cranfield. So, Mark, when we're looking at the market action today, the first day of the new quarter, does that inform maybe rotation ahead? Is that what you're seeing?
Potentially. I mean, sometimes it's a bit risky to read a lot into the first hour or two of transactions. But if you think of what happened in the third quarter, we saw Kospi leading the way in Asia. TAIEX was number 2, Nikkei was number 3. Maybe you're going to see a bit of a change there. We've just had fantastic Tankan report, way better than expected. You've got the Prime Minister and the government there looking at very strong economic growth, pumping a lot of money into the Japanese economy, and you have a currency which is supporting the backdrop as well. It's relatively weak, helps the exporters, and you've got a central bank who is really taking its time to get to the neutral rate level. So we know, or at least investors are taking the stance that they don't see the Bank of Japan speeding up. They're going to always stay behind this neutral rate level. So those negative real yields will continue to weigh on the currency. That will help. And then you've got Japanese companies are clearly going to benefit as well from the overall growth in the AI story, which still seems to have legs. If you look at what happened last night in America as well, there seems to still be plenty of momentum there. So all in all, the conditions still look pretty good for Asian equities. And now if you've done very well through the second quarter, you might be looking for who's going to outperform in the third. And certainly Japan has catch-up room compared to some of the other leaders we saw previously.
What about the yen? Is it even in the hands of Japanese authorities? It seems like it's more in the hands of Wash.
It is certainly in the Japanese hands if they want to do something about it. But I think investors are getting the sense that there's a benign neglect going on here. Don't forget, there's also competition between currencies. It's not just about the yen. They see the Korean currency as well is also just as weak as the Japanese yen. So they're competing in the same kind of markets. They can't really afford to have their currency outperforming everybody else when there's weakness in the Taiwanese dollar and the Korean won as well. So that's part of the story there. They're more concerned at making sure that the Japanese economy gets onto a very strong and solid footing. So they're encouraging the people there to keep away from raising interest rates too fast, and that obviously impacts the yen as well. So it's what the Japanese authorities are not doing as much as anything, and traders can see that. They can see that they're standing back for now. We had the report last night. There was no intervention for a whole month, even though dollar yen was climbing. Up to the date of June 26th, when the report came out last night, they did not intervene at all. That's another encouragement for people that want to short the currency. Clearly, there's no big pushback from Japanese stock. Doesn't mean to say they won't do some intervention. They did do some in May, knocked dollar yen down for a brief period of time. Wasn't sustainable. Maybe they'll come in again if it moves too fast. But it doesn't look as though they're going to take really aggressive action.
Mark, where does that leave dollar yen? I think Mizuho had an interesting call that without intervention, dollar yen could go up to 170. No man's land, as they say. What could we actually see for dollar yen moving forward?
Well, the reason why people are talking about that is because they're looking back to the 1980s. So we've moved, as Bloomberg has been reporting quite clearly this week, we've moved up to the highest level since 1986. But if you go back and look at that price action, so we were in a period, we had the Plaza Accord in 1985. And if you look at what happened between 1985 and the end of 1986, dollar yen actually dropped from 262 to 160 and slightly below over the period of just over a year. So it dropped 100 big figures. We're now back above, we're up to 163 almost now in dollar yen. If you look back, and foreign exchange markets, like all markets, they tend to look at history for guidance as to where they might go. So if you're looking back at the 1980s, you will see there's a big line between 160 and 260. Doesn't mean to say it's going to go there all the way. And of course, markets have changed. They're much more complex than they were back in the 1980s. But a lot more people involved in the foreign exchange market. But it does tell you that in terms of historical price action, there isn't that much to stop dollar yen going towards the 200 line unless Japanese authorities and maybe US authorities decide that it's time to do something about it. Otherwise, people will keep on looking at those old charts and think, well, that's the way we're going.
Mark, thank you. Mark Cranfield there, MLive strategist, joining us out of Singapore. Meanwhile, and what does this mean, right? The second half for Chinese stocks and really have gone on divergent paths this year. And talk about K-shaped economy, well, K-shaped markets as well. Take a look at that. Depending on which benchmark you follow, stocks are either in a bull run or near a bear market, right? You take a look at when it comes to HS Tech. When you talk about what's going on there, that continues to be a very negative story. On the flip side, though, you talk about the innovation side of things, the Shenzhen sort of gauges, and you continue to see near records for some of these benchmarks as well. Our managing editor for Asia Equities, Yanting Tu, is with us right now. So what is it, right? Is China really in a bull market or a bear market?
The honest answer is a bit of both, as you highlighted just now. If you look at AI and semiconductor champions in China, it's clearly in a bull market, right? Star 50 index up more than 60% year to date. And that's driven by enthusiasm around AI, around advanced manufacturing, around Xi Jinping's push for Beijing to have tech reliancy, self-reliancy, I should say. So, overall, that sector is really booming. But if you look at consumer-facing sectors and also internet platforms, it's a very different story. All the major indices tracking the likes of Tencent and Alibaba are showing very steep losses. That's because earnings are continuing to be weighed down by lack of consumer spending. And so that means the market is really mirroring the very uneven economy that China is experiencing right now, with very strong AI investments and export boom, but very weak consumer sector. So if Beijing doesn't come out with some kind of strong catalyst, that kind of divide will continue to persist.
Yanting, the AI boom also benefiting Malaysia's tech index, which just posted its best quarter on record. Is this catch up, or are investors recognizing Malaysia as a true AI beneficiary?
Yeah, it's a bit of both. So Malaysia has been part of the AI supply chain for years in terms of, being involved in chip packaging, chip equipment manufacturing, chip testing. So really part of very core supply chain there. Malaysia as an economy has also drawn billions of dollars in investments into data centers. Previously, investors were just very much focused on obvious AI winners, those in Taiwan and Korea and those in the US. And now, because the valuation there became a little bit stretched and the positioning has been quite crowded there, investors are looking elsewhere. And Malaysia, because it has recently reported very stellar export numbers, especially in the electronics manufacturing sector, as well as very good earnings growth. So people are giving it another look. And it doesn't look like it's a short-term sort of trade. It does feel like it's part of the longer-term trend of investors trying to broaden out their AI trade.
Lian-Ting, thank you so much. Bloomberg's managing editor for Asia Equities, Lian-Ting, too. Still ahead, we speak to the Japan Investment Corporation about supporting startups and accelerating public and private sector investment in AI and semiconductors. And we're counting down to the open of trade in Shanghai and Shenzhen. This is The China Show.
All right, we are checking when it comes to dollar yen here this morning. What's going to be that fresh line in the sand, really, for policymakers? We continue to see it inch higher here this morning at these new 40-year highs for dollar yen, 162.71 here this morning. So certainly one thing to watch. We talked about the Mizuho call that if they do nothing, could be getting to 170 levels as well. So this is sort of uncharted territory here right now. Certainly one thing we need to check out for in terms of levels, right? Because you take a look at the key levels to watch. When we did hit 163 plus, this is probably where the next threshold is going to be. The barrier is what we saw in 1986 of Christmas. This is what Mizuho says, is you got to look back at history to see when and why. And 164.50 was what they highlighted. And 165 could be in play as well on the hawkish Fed. And certainly we started to see that, right? Fed fund futures and really what traders are really pricing in now, even just a more chance of even a July hike. It's a very long sort of play here, but certainly the chances of that are about 30% according to some traders right now as well. So yes, certainly the yen is in focus, but really we've been talking about what the government and really this push towards strategic sectors like AI, right, which continues to really help with Japan and why everyone's saying, and in some ways Japan is back. The Prime Minister Sanae Takaichi is pursuing a $2.3 trillion investment plan targeting sectors such as AI and chips. And for a look at how startups are really positioning around this, let's bring in Yuka Hata, Senior Managing Director and Head of Fund Investments at the government-backed Japan Investment Corps. You guys, really great to have you. I know you're about to head out to IVS, right? This is one of the biggest conferences for startups there in Japan. And the theme really is Japan is back. Obviously, this AI boom, and Japan really seems to be well positioned here right now. What are you seeing on the ground?
Right, thank you so much for asking. Obviously, Japan's startup ecosystem has been really dramatically changed. And, when I kind of joined the GIC in the past kind of 6 years, obviously it was pretty domestic driven market. And, the risk capital being really provided with a limited VC fund. But now, obviously, with the help, the strong support with GICs, more and more the local VCs are participating in this kind of ecosystem. And moreover, that we inviting more the global leading VC firms capital into this ecosystem. So obviously, boom is still there. And obviously that, AI is definitely the strong key themes in this market, same for the global market.
Yuka, what are some of the financial gaps that you see among the high potential companies that may be making foreign VCs have a second think for these startups?
Okay, but obviously, as I mentioned that, more and more the capitals into this market. But obviously, the challenge here is that the size of the growth capitals. JIC has a subsidiary called VGI. VGI has been really supporting quite strongly to the growth capital market, but still the growth capital the need is quite strong, especially that we are shifting more supporting to the physical AI, deep tech. These are the technology that required a lot of capitals. So definitely we need the market to be connected to the global market. So that's why that we are strongly inviting more the global leading managers into this kind of ecosystem. So JIC has been set the Go Global strategy since 2022. And since then, that the JICs are investing the global leading managers so that they are particularly, with a strong support with the JIC itself and our subsidiary VGI, connecting to the local managers, they are strongly motivated to really work on the Japan startup ecosystem with the capital as well as the strong support for the growth with their platform.
I was looking at some of the strategic sector investments you guys made last year, Yuka, and predominantly it seems to be your number one. I mean, you had close to 176 deals in the AI and semiconductor space. What is the JIC's investment thesis around AI right now? Is it still built around the sort of infrastructure side of things, or are you looking more at the AI application side now more?
It's absolutely the AI application is this kind of strong need. And as you say that Japan's are facing the strong kind of issue with the labor shortage. And with that challenges, we definitely need, to upgrade our, the industry digitalizations and robotics. So that's something that the AI has a strong support to increase improve the productivity in the manufacturing side, as well as even the kind of retails, customer facing, or even like a white collar, office side as well. So that's something that AI is playing a strong, important role to provide application to each industry or the business side.
Yuka, AI, as we know, a very competitive space. I mean, we've seen this week South Korea also unveiling massive investments for chips, data centers. How is Japan looking to maintain its competitive edge?
Well, thank you so much. So obviously Japan's, industry overall that we are putting money to the obviously data center, the infrastructure base, or lifting up the energy needs. So that's something. It's an overall it's an ecosystem trying to kind of supporting to provide a risk capital in that place. But moreover, Japan has a strong industry depth in this market. So to create more kind of strong physical AI opportunities, definitely that Japan has a sort of the strong kind of foundation to provide data. So that's something that we have a strong competitive edge to create more strong physical AI space out of this kind of market.
You guys, I want to ask you about the regulatory environment as well, because we heard from the Tokyo Stock Exchange, they've recently tightened some of the listing maintenance sort of criteria for some of these emerging companies, right? So they announced that the current requirement of a market cap of at least 4 billion yen after 10 years of listing will be changed from 2030 now to a requirement of at least 10 billion yen after 5 years of listing. What is your sort of role, I guess, in JIC in helping to support some of these, startups through the VC sort of channels here in order for them to actually meet these IPO requirements?
Actually, this kind of gives kind of a strong opportunity for the local manager to think IPO is not only exit route. It used to be before. So that's something that, more and more local managers start to work with the industry and M&A market. And we have seen the increase of the M&A market for the startup space, and a strong startup also for their inorganic growth. They are actually using this kind of M&A to bring their growth to the next stage. So overall, it's not just the exit market for the M&A. This is also the great support for the startup kind of growth. And at the end of the day, if this can start up to create more inorganic growth, they can actually go more global scale IPO in the Tokyo Stock Exchange market. And on the other hand, since 2022 and 3, GIC is promoting to supporting the secondary manager in this market. And increasingly, the Japanese VC are using this kind of secondary market for partial exit that improve the DPI for the LP's perspectives. But that's also the great the momentum that the VC firm in the past, they wait and see for the exit route, but now they are more using their strategy to how they can improve more the DPO, how they can actually accelerate the IRR for the performance perspectives. So overall, I think the Japan's kind of startup ecosystem are moving to the next stage for the fund management perspective.
Yuka, it's so interesting how the investment landscape is shifting. Thank you for talking us through the plans here. Yuka Hata is Senior Managing Director and Head of Fund Investments at the government-backed Japan Investment Corporation. Let's also take a look at how things are faring on the mainland ahead of the open of markets. Watching their futures pointing pretty flat. Plenty more ahead. This is Bloomberg.
All right, your watch for really what's going on in China today. Hong Kong markets are shut for a holiday. So Xi Jinping, though, is set to speak later on the top of the hour here on the back of this 105-year anniversary of the founding of the CCP. So we'll take to that speech once we do see it here. We are expecting some private gauge of that China PMI number after we did see some incremental improvement in the official gauge yesterday. Some June casino revenue coming through from Macau later today, and there is going to be a CGB sale today as well.
Yep, watching futures in the meantime for China, particularly watching tech given these Capricorn warnings, of course. But when it comes to the yuan, take a look at also the dollar side of the equation. These bullish bets on the Chinese yuan, are they fading given the greenback's bounce? We'll continue tracking that. This is Bloomberg. Welcome back. You're watching The China Show. We're counting down to the open of markets in the mainland. Of course, Hong Kong is shut today. And this is coming at the time where really after a stellar quarter when it comes to Asian stocks overall, you saw a fourth straight quarter of climb on the greenback. What is that going to mean for the setup for the rest of the year, Yvonne, especially when you look at the AI thematic? The undercurrent, the extent in which that has driven the likes of Korea. Maybe we see some beneficiaries, they're broadening out of that AI rally a bit more now. Yvonne?
Yeah, you take a look at the Korea, right? You're starting to see even just the performance gap with Taiwan start to widen a bit more, that potentially this sort of rotation and broadening out of this whole AI trade might actually mean that Taipei wins over Seoul here, given the fact that the Kospi, there's only really two stocks that people have been really betting on up to late. But when you talk about, yes, this whole narrative that North Asia is really kind of outperforming the rest of, China here in terms of this AI boom, it's somewhat incorrect, right? However you slice and dice it, right? There are still standout markets to wrap up this quarter that we had, particularly when we talked about the Star 50, the Chinex in Shenzhen that continues to be quite strong around some of these AI pure plays domestically, right? So is China in a bull market or in a bear market? It's kind of a bit of yes and no, right? So certainly that's one thing to watch. So both of which we're tracking, right? Onshore is doing this right now. We're flat here this morning. Hong Kong markets are still shut for a holiday. In terms of what we're watching out for, can we go back to the dashboard real quick here? I just want to focus on some of the key stocks that we're watching out for, in particular when it comes to Capricorn Tech. 1.3% losses here right now. Interestingly enough, there was reports here that this stock was one of the first on the Star board to actually become a 1 trillion yuan market cap. So certainly that's one milestone to really hit when it comes to some of these chip players here. And then again, the company also started warning about the rise in material costs, which could end up hurting their earnings. So maybe that's why the stock is a little bit choppy here right now. We're also watching the likes of Medea as well, seeing some gains here in the onshore market. There's reports that also they're interested in listing its German robotics maker, Yuka. So certainly that's one thing to watch very closely as well in the consumer space, so to speak. CATL shares are still lower by 1% here today. We're watching some of these chip stocks as well, just given some of the warnings that we heard from the likes of Capricorn Tech, and whether that actually sends a bit of nerves around just the overall chip space here, right? When you talk about the chip stocks, basically in the U.S. had the best quarter ever. Mainland chip stocks have also delivered as well. We continue to see actually pretty solid gains with the likes of SMIC. That's up 2% here right now. Inverter stocks, that's one thing to watch as well. On the back of concerns around a potential U.S. I think it's import ban. So certainly that's one thing to watch very closely here. So yes, they are all falling here right now. Sungrow power supply in particular is down some double digits. Avril.
Yep, here to talk us through as well what this quarter and perhaps the next quarter, the rest of this year is going to look like. Our next guest, Christina Woon, is portfolio manager at Eastspring Investments. Christina, great to have you in the studio. So we're looking at, quite a good start for this quarter so far. All things considered, Japan is outpacing Korea, but you also had that thematic of AI very clear in the second quarter. Talk to us about the need to be maybe more selective this quarter and what is the trend underlying that you see?
Definitely. I think you're right. Being selective this quarter is going to be quite important because as we've been discussing, or as we've seen, the past quarter has seen one of the strongest runs in a while within the tech space. And there's a lot to like about tech. It's got quite a deep supply chain, and you can basically follow the bottlenecks within the supply chain to find alpha opportunities. But my concern is at these elevated levels and with the volatility we've seen in the market, you really have to be quite selective to be sure that you're picking stocks that haven't overshot on fundamentals. So that's the way I would frame the AI trade at this point.
How do you feel about Korea now?
Well, I think Korea still has, with the select memory names, the fundamentals there are still quite strong. You're still seeing memory prices holding up and actually increasing as well. I think that tightness in supply is still intact. The difficulty that we've seen, or the added dynamic that's really come in, has been from a flows perspective, because the retail investor has started to become a larger proportion of that, and that can be quite volatile or add volatility to that trade as well. We've seen leverage ETFs also be another dynamic that retail players have also participated in. So flows is something that's been a bit difficult to ignore, I would say, is a dynamic we have to consider as well. And then starting today, you're seeing rebalancing domestically with NPS too. So again, with Korea, while there are interesting stocks there that have structural runs, the flows part is something investors should keep an eye on.
So where are you maybe shifting to in place of Korea?
Sure. I think outside of Korea, some other parts that are quite interesting would be within India. I think with the volatility in the tech trade at this point, India is starting to look interesting from a valuations perspective as well. That's come off a lot. It's quite a laggard. The other side of it is also with oil prices coming off, the attractiveness or I guess the relative healthiness of India as a market has improved as well. That's where I would say some investors can look to for diversification as well as buffer amid the volatility within tech.
Christina, I was going to ask you about markets like Korea and Taiwan, for example, have done quite well, right? What you see in this market is it's increasingly become very retail driven, right? When you have retail investors continue to pile into these markets domestically at a time when foreign investors are in some ways, tapping out. What do you make of this dynamic? And does it raise a lot of questions about whether, diversification actually is a good strategy moving forward?
Yeah, I absolutely agree with what you've said. I think that especially in the current markets, you have to think about diversification. A lot of people have piled into the tech trade, and as I mentioned before, for good reason. But if you want to ensure that you generate consistent returns and to ride through this volatility, you can't just have all your eggs in one basket. Which is why I think, we discussed India earlier. There are other parts within the market that could be interesting as well, or you might see dislocations. The materials sector has come off quite a lot in the past month too, but when you think about fundamentals there or some of the numbers that some companies have also been delivering, these continue to be quite strong. So that's the way that I would look at things at this point. With the volatility, where are there really dislocations in certain sectors that could be interesting, or some overlooked sectors that could be interesting as well.
Is there still overlooked bits of the Chinese AI trade, especially when it comes to the broadening out beyond hardware as well?
Yeah, I think that's absolutely right. You've been spot on when you think about which parts in China have actually been holding up quite well. The China tech trade has actually been pretty strong, and we've seen really, really strong share price runs within that space. But similar to what you see in Taiwan, the China ecosystem is one that's continuing to build out, and it's also quite deep in terms of different parts of supply chains that you can play in. So I would say similar to the playbook that the entire market has done with Taiwan, you can apply the same lens with the China ecosystem and also find these bottlenecks and then capitalize on that as well.
What are you expecting in terms of the potential for event risk, say, around the Fed in July, given how, markets are still deciding whether wash is a hawk or a dove?
Yeah, that's been topical, and I think something that investors do have to keep an eye on as well, especially seeing how things have moved so fast, right? We started off the year thinking that rates would come off, and then now we're thinking, it's going to go back up again. But I think that really brings to light the importance of being focused on picking stocks, because when you find idiosyncratic drivers that can offset or potentially offset beta, that's how you kind of stay above any macro event risk. Sure, that will still impact certain market sentiment as well, but it's really how you stay abreast of that or keep above the market in that sense.
Yeah, Christina, when you look at some of the risks for the second half, it's interesting that at least the oil price has come down, right? We're talking more about $70 oil here right now, given that there has been progress when it comes to this, Iran war. Strait of Hormuz seems to be, slowly but surely opening up in some ways. But the macro risks are still there. I still see traders are pricing in rate hikes from the Fed. Talk to us about that dynamic. How concerned should we still be about inflation in the second half?
I do think that's something that we need to bear in mind. Even with oil prices coming off, they're still at fairly elevated levels. And in some markets, you've seen subsidies come through to ensure that hasn't really quite impacted the consumer yet. So I think that's still a dynamic that we have to bear in mind. And it's not just oil prices, right? With certain commodity prices also, we've seen price inflation there. Even if things have corrected, these are not from, these are still at fairly elevated levels. So while the risk has come off a little, there are different dynamics at play that mean that inflation is not something we can ignore. And the other part of that also from a macroeconomic perspective would be people will be looking to where inflation levels kind of settle as well to guide where we see WASH sort of takes a view on from a rates perspective.
So given the potential inflation backdrop, what else are you looking at potentially dividend yielding, in this environment?
Yeah, I would say, actually going back to Korea, some of the stocks there still have quite a strong dividend angle because what we've seen over the past few years in terms of corporate reform is one that's multi-year. So we're still seeing some of these companies come up with dividend policies that are improving. So your payout ratios go up year on year, or they're improving how they look at shareholder return, whether it's based off of cash flows as well. So that's a rhetoric that I would say actually supports some of or any of the froth that comes out of the Korean market too. So that's something that could be interesting.
Okay. Christina, we'll have you back to talk about that maybe in the later parts of this year. Christina Woon, Portfolio Manager at Eastspring Investments. Thank you so much. Now, coming up, basketball superstar Yao Ming tells us how the sport can build bridges between China and the US and why the NBA Hall of Famer thinks another league is the sport's most successful brand. That conversation is next. This is Bloomberg.
Well, Nike shares fell in late trade after cautious demand outlook really offset what was actually a fourth quarter earnings beat. So certainly one to watch here, just given what we've been seeing with, of course, Nike. Even so, Bloomberg Intelligence says a turnaround now underway could regain some lost ground. Let's bring in Catherine Lim, our senior consumer and technology analyst for Bloomberg Intelligence. She's with us here right now. So, Catherine, are we starting to see signs of a real recovery?
Well, it's a clearer turnaround than before, but I wouldn't really quite call it a clean recovery because, again, the headline numbers, the way I see it, it's still weak. Fourth quarter revenue was down. Greater China, if you look at it itself, it was a 17% decline in the fourth quarter. And notably, sportswear, the Jordan streetwear still remains the problem areas. And, management is admitting that, they are still challenged with the sell-through and discounting pressure. But we do have to give Nike the credit that its performance business is working. Again, the running, the football, the tennis, better momentum, which is great, particularly in China. So it is moving in the right direction strategically, but we do need evidence that this can translate into more sustainable full price demand and revenue growth.
Yeah, this is also coming at a time when Nike has been talking about returning to sport. What's the significance of that? Why does that matter?
Yeah, it really does matter because, this is where Nike has the strongest credibility. Even the company said that its performance business grew mid-single digits, for the reported fiscal year itself. And again, it is the sportswear, the more lifestyle-related stuff that remains under pressure. And really the signs of that is quite common with what we've seen in, some of the other brands whereby, when your portfolio becomes too lifestyle-led, too promotional, less differentiated, that's when the picky Chinese consumers in particular, for instance, they start to gravitate towards something, a little more unique. So returning to sport, it's not just a marketing language, if you ask me. It is Nike trying to rebuild the pricing power around innovation, product function, and I do think that this is something that they need to actually work on.
Yeah, and why investors are, I guess, getting, the patience being tested is really the weakness that we still see in Greater China, right? And it looked like China was still weak for Nike this quarter. And Elliot Hill, the CEO, did talk about this comprehensive reset for this market. What stood out to you in that commentary?
Yeah, what stood out for me really was that, it is a reiteration of the reset. They've mentioned it, in the last couple of calls itself, whether it's cleaning up inventory, reducing promotions, getting to that full price realization. It is trying to become more premium and more local, more sport-led in China. And this is what stood out, in this quarter's results. So I do believe that this is the right playbook based on, all the work that we've actually done on the sportswear market in China. But the reality is that it will take time because the market is very highly competitive. All of us know it. And, Chinese consumers, as I mentioned earlier, has become much more selective.
And we know that you've just published a China luxury survey as well. What does this tell us about Chinese consumers? How does that maybe apply to Nike as well?
Yeah, our survey shows that, Chinese consumers are not simply buying logos anymore. They are increasingly more willing to pay up for functionality, technical design and performance credibility. So, even if you look at Arterex, which is more expensive, like for like comparable items, for instance, it is still ranked as, one of our most preferred brands. And it comes true in the sales numbers of Arterex versus Nike, for instance. Now, this is important because it really shows a shift from just pure status, logo-led, apparels into what I would call technical prestige. And this actually supports Nike's pivot, just to go back to Nike's results again. Because if Chinese consumers are rewarding brands with functional credibility, then Nike's running momentum, for instance, the ACG opportunity and sport-led innovation are directly aligned with what we are seeing.
Catherine, thank you. Catherine Lim there, Bloomberg Intelligence Senior Consumer and Technology Analyst. Yeah, make sure to check out that luxury survey there. It's a really big one, but really quite extensive as well. We're talking some data that's coming through here in your terminal here. This is, of course, the RatingDog China PMI manufacturing gauge coming in slightly off estimates here, 51.7. That is also softer from the previous month of 51.8. So, but we're still talking about expansion numbers here. But yes, slightly missed there. But certainly it's interesting to see, given the official gauge we did see some marginal improvements on the manufacturing side of things as well. Let's move on here. And as we stick to sport, right? Why not? The eyes of the sporting world may be on the FIFA World Cup right now, but Chinese basketball star Yao Ming says his sport is still the most popular internationally. The NBA Hall of Famer spoke to us about the global reach of the top U.S. leagues and how the sport connects America and China.
Basketball is the most popular sport in the world. I know this. FIFA's World Cup now is probably top is headline for all the newspaper today. But I have to say that basketball is shoulder to shoulder in China compared to football or soccer, what you call. And that influences so many of the young generation that they play on a basketball field every day after school. Sometimes they skip school for that. After me, there's many young fellows who joined the NBA. Last year we have a young player called Hansen Young, who joined the Portland Trailblazers. I'm sure there's many young players like him that eager to reach their sky, hopefully here in the next few years. So basketball really connecting us together on the same field, and that's the magic of it.
Well, one of the places that the NBA is trying to expand is in Europe specifically, trying to build a league there. Are you in any talks? Do you have any interest in potentially being part of the ownership process?
That's a big news, obviously. Yeah. It's a very big news, and I have a few European friends. We're talking to each other once in a while to see how that's going. So, I wish all the success. I'm sure NBA have their rich experience to help this being a success, and I'm sure they will bring this sport to another level.
I am curious about the cultural impact. When we talk about the NBA's impact on China, and obviously the exporting of our brands, whether it's Nike and some of the other brands out there, Reebok, which you were a part of as well. We're also kind of, to a certain extent, seeing the reverse of that. We're seeing U.S. players now getting endorsement deals with Chinese firms. And I am curious as to what you see over there with regards to how younger consumers, the types of brands they're looking for, the types of products they're looking for.
It's very nice interaction. Stephen Curry just signed with the Li Ning brand, which is a huge impact. Everybody excited about it. And the Li Ning brand, his founder, Mr. Li Ning, is a national hero for us. When I was young, he won an Olympic title back to 1984 in Los Angeles. He's a national hero for us. And now, imagine, those. There's a hero from the older generation to the current generation that's really make a lot of. I'm sure that will be a very successful cooperation, and I'm really thinking that will be not only one, there will be more coming.
Well, I'd love to talk a little bit more about your investments, because one of them is the Asian University Basketball League. Nets owner Joe Tsai also is invested there. Talk to us a little bit about what your thought process was behind that investment and what you're hoping that, that can achieve.
I'm always excited about NCAA. The NCAA, besides NBA, NCAA is the most successful basketball brand in America. That for sure. And in China, that we have our college basketball league too. But also Asia, especially Asia is a big market, and there's many famous college basketball team that are out there. I mean, and I spoke to Joe that we agree that they need a platform that can put everybody together, and we're sure that in that area we somehow, hopefully in the future, after a couple of years, that we can create similar things like NCAA.
NBA Hall of Famer Yao Ming speaking to Bloomberg's Romaine Bostick and Katie Greifel. And you can rewatch that on the Bloomberg Video Hub. Subscribers can explore live streaming, news, interviews, all our Bloomberg TV shows, documentaries, reporter analysis, and more. Check out bloomberg.com/videos. This is Bloomberg.
We're checking markets here this morning. U.S. futures are doing this here, of course, ahead of the jobs data that comes out on this Friday, given the fact that, of course, it is going to be one to watch when it comes to what the strength of the labor market is and the like. We did see yields pick up overnight as well, more looking at, what's been really the more value that could be returning the long end of the curve. We're slightly in the red when it comes to U.S. futures here this morning. We're watching dollar moves, given what we're seeing with yen, obviously. Also, when it comes to the Korean won, we're getting ever so closer to levels we haven't seen since 2009 for the won at 15.58. So that could be one to watch there coming up next. We'll have a lot more on the way in the next hour. You're watching The China Show. Welcome back to The China Show. We are seeing some live pictures, of course, there of Beijing, the Great Hall of the People, as we, of course, count down to President Xi Jinping's speech in Beijing and really marking 105 years since the founding of the CCP. So we'll bring you, of course, that speech once we see and have eyes on the president here. In the meantime, let's get you caught up with how markets are doing. CSI 300, half hour to the session, is slightly flat here this morning. Hong Kong markets are shut for a holiday, but we have started to see maybe signs of maybe this rotation, right? And whether China can finally kind of catch up in some ways. When Avril, you're starting to see a bit of a split or at least dispersion within the whole AI trade in Asia itself.
Yep, there is certainly a gap. Take a look at how Asia is faring today. You have Japan pulling ahead, especially after those Tankan numbers. Good sentiment among large manufacturers. Clear beat there, supporting the case for the BOJ in terms of hikes. Whether they do it or not is a different question. We'll discuss a bit more on that in just a bit. But take a look at the laggard today. That is South Korea, quite pronounced. You're seeing that selling exacerbated as the session progresses, given how the likes of SK, Hynix and Samsung Electronics have now shifted to not just becoming the takers, the beneficiaries of AI, but the capex. I think that is the concern now, that they have to spend to keep things going. TAIEX is pulling ahead, about 2% higher at the moment. Take a look at what we're seeing across FX. We've been talking about this dollar bounce, right? And maybe in some ways that is also stemming what you're seeing in terms of South Korea when it comes to the outflows from the stock market. As far as foreigners are concerned, the Korean won is certainly on the back foot. We're watching those key levels, could take it to the lowest since 2009. And then, of course, the yen, fresh 40-year low. Keeping an eye on dollar China as well, given everything that's happening in China at the moment. And copper, given how there's, this positivity, I suppose, that has returned to the Strait of Hormuz, given the Fed rate outlook. We're keeping an eye on prices as well. Aside from hearing the Chinese president speak, also set to hear potentially from the US president, maybe making a decision on copper levies. Yvonne?
Yes, that's the one thing to watch for the market, whether they do add those levies when it comes to copper. So, which, there has been a lot of questions on what to do next here. So that plan is coming up, maybe that deadline later on today. You've seen those live pictures there, and there he is. President Xi is there and really ready to make that speech here. But in the meantime, let's bring in our markets reporter, Anthony Stevens, on what we're seeing in the tech space across the region today.
It's very interesting to see how broad the rally is in Taiwan. So Taiwan has always been at this cross-section of the US and the Chinese tech ecosystem. They benefit from both. And now they're benefiting from this huge spending from Samsung and Hynix as well. So this rally is getting supercharged. You saw the TSM ADR in the US pop to a 25% premium. That's the highest since the pop in January of this year. So that's a very aggressive mark on that trade going into the second half. Underneath TSMC, though, a lot of names in Taiwan are on triple-digit gains for the year. There's stuff that's up 250%, 300%, and these are things that are not that technologically complex, like circuit boards, passive elements on circuits. These are things that are just in shortage. There's just not enough of them, and Taiwan is the only country making them on scale. So this market is having quite a run. On the other hand, Korea is very heavy on the memory trade. And memory actually has started to lag even in the US and in Japan, because the memory usage of models will change as they move from being trained to being used. So that transition in the tech trade is becoming very key as we go into the back half of this year.
What are you watching in terms of the Korean won as well? Given all this attention on the yen, right? The won is silently creeping to really low levels against the greenback. Do you think there needs to be a BOK hike to stem this Korean won weakness?
Yeah, there's a lot of economic parallels between Japan and Korea in this moment, right? You have this technology boom that is lifting equity sentiment, but those gains are relatively narrow. So you have this argument that you have a strong equity market and a weak FX. Why don't you hike rates? And the reason neither the BOJ or BOK is very keen to rise rates is because the economic gains are so far so narrow. And the market knows this, and it's starting to push this FX weaker, because the anticipation of a rate hike is just not on the cards in the same aggressiveness as the Fed. So the correlation between these two markets in the FX market has started to increase. On the equity side, Korea is under a little bit more pressure because of the foreign outflow. So foreigners continue to sell Korea on the way up and on the way down. We're on a 7-day streak of foreign selling that is now, if I've lost count, it's probably in the $95 billion level year to date. So that is a tide of outflow that would have sunk the FX of a weaker country by much more, but that is a continuous headwind for this market.
Yeah, it's so interesting how Korea remains unloved among foreign investors, some of them at least. Anthony, thank you so much. Bloomberg Markets reporter Anthony Stevens. Now, talking us through as well some of these other FX moves. Christopher Wong, Executive Director and FX Strategist at OCBC, joins us. Chris, so we are watching, of course, some of these key levels when it comes to the yen and the Korean won. What are you watching specifically as far as intervention is concerned for the Japanese currency?
I think what's driving the dollar yen has pretty much been a case of the U-gap differentials. To a large extent, there are also questions about, how the BOJ policy normalization has been running a little bit slower. And we've seen this morning, how the Tankan survey results have come in quite strong as well. But this is not being reflected in terms of the pace of policy normalization. And then on the other hand, you have a dollar strength that is going through the markets. So to a large extent, this is still driving dollar yen. And on the intervention side, we have not heard a strong enough signal from officials when it comes to intervention. So I think these are some forces that continues to feed into the carry trade, that continues to feed in dollar yen going higher. I think at these levels, I'll be careful about chasing upside. But I think, between here and there, we're looking at somewhere closer to 40-year low in terms of the yen, and probably coming very close to the 164.50, 165 levels, which I think that's quite a big focus on those levels.
The yen has also been weakening against the renminbi. Is there a carry trade there?
Yeah, I think to some extent, if we look at the renminbi, right, it's been since April, May last year, it's been on the trajectory of a very measured and managed pace of a renminbi appreciation. I mean, the last 2 weeks, there was a little bit of a slowdown in terms of the pace of appreciation, but this was largely to reflect the market movements and the dollar strength. But largely, if we look at the trend, it has been on an appreciation pace, and then yen, on the other hand, together with Korean won, is on the other direction. So to a large extent, you can argue that that there is a little bit of that directionary bias to the upside in terms of the renminbi to the yen.
What do you make of the dollar, right? This breakout that seems to be making way here right now for the greenback here. Have we finally turned the corner, you think, when it comes to the dollar?
Yeah, I think in the near term, there's quite a bit of a support coming in from what we've been seeing about the hawkish Fed repricing, the hawkish rhetoric coming out from Wash, the resilient US data as well. But I mean, at this point, many dollar positives are in the price. So I would say that to a large extent, dollar would need some hawkish validation, either from data, which we probably will see some coming up on Thursday in the non-farm payrolls. Also from Kevin Walsh, who's going to be speaking tonight in a panel together with some of the central bankers in Sintra. So it is important that there is, that sort of a hawkish rhetoric coming on in order for the dollar momentum to carry on. But if we see data coming in a little bit softer, if we see Kevin Walsh doesn't sound any hawkish or doesn't sound any more hawkish, then with all the dollar positives that have been priced in, I think there is a good chance we might see a slowdown in that dollar momentum.
Okay, if things could slow down, I mean, what EMFX certainly has been under pressure. I mean, what are you watching in terms of Asia FX, EMFX? But beyond just the yen, where could we see more of the pain felt?
Yeah, in terms of the pain, I think what we've been seeing, Korean won, we spoke about resident outflows as well, and not just foreign outflows. This continues to feed into higher dollar Korea, and then some of the lower yielding currencies are also under a lot more pressure, like the yen as well. But I think on the flip side, with oil prices coming off a good decline from what we've seen earlier in May, this is a good boost to a good window for some of this net oil importer FX to potentially get a breather. So some of these currencies like IDR and the India rupee, I think there is a good chance there could be room for appreciation. And that's provided, we don't see further dollar strength or we start to see that hawkish repricing slow down a little bit.
Aside from that, I mean, what are you seeing for Taiwan dollar as well? Potentially hitting some of these roadblocks. I mean, it's interesting, you see the stock boom, AI boom for Taiwan, for Korea, but then the languishing in their local currencies.
Yeah, so in terms of the currency, it is similar. There is a little bit of a disconnect between the AI boom and how it's manifesting into the exports, but it's not coming in via the flows or from the FX point of view. So that disconnect is also happening in Taiwan dollar. But I would say that disconnect is happening more in Korean won, whereas for Taiwan dollar, there is still a little bit of a correlation between the Taiwan dollar and the what we've seen with the TAIEX and the Taiwan equity. So on a relative value play, Korean won and yen could be a little bit more softer, but the Taiwan dollar, I think, could potentially get a better fit out of this.
What are you expecting in terms of central bank tightening in the back half of the year, in spite of how oil prices are in check now? Do the likes of the BOK need to tighten a little just to stem some of these outflows?
I think when it comes to BOK and the outflows, I think a lot also depends on the inflationary expectations for them to move that needle to tighten rates. What's going on in there? I think that there is room for potentially a tightening. But the question is, how much more can they do? So I think a lot will come in terms of communications, like how the central banks in the region, in Southeast Asia, in Malaysia, in Indonesia, have been taking efforts to reassure investors. I think this is something that we have not been seeing from some of these BOK authorities. I think that needs to be stepped up a lot more.
Christopher, I got to get your take when it comes to precious metals. I know you guys just revised your forecast for gold and silver to the downside. What was the thinking around that here? And how should I be looking at precious metals in the second half?
Yeah, so largely, from a real rates point of view, it's gone through quite a bit of a sharp repricing to the upside. And that's largely also in line with what we've been seeing from the hawkish rhetoric out of Wash. So, and we know, if you look back in history, periods where there is tightening or periods where there is a shift from rate cuts to rate high, this kind of a window typically is quite nasty for gold prices. So if I can just bring you back a little bit, if we recall our memories back in Taper Tantrum in 2013, I think gold prices fell between 25 to 30%, that sort of thing. So we are, I wouldn't say we are exactly at those levels because hawkish rhetoric may not necessarily materialize into actual tightening. So I think a lot depends on whether Wash is really fighting or battling inflation, or is he, just building that Fed credibility. And after all, at the end of the day, if there is no hike, then potentially we could see the environment turn a little bit more positive for gold. But just in the short term, it's going to be challenging.
Okay, Christopher, great to have you. Thank you so much. We covered everything. Christopher Wong there, Executive Director and FX Strategist at OCBC. Let's bring you back to those live pictures in Beijing, inside the Great Hall of the People, where the Chinese President Xi Jinping is about to give a speech as the country marks the 105th anniversary of the Chinese Communist Party. Here he is right now. I think he is giving out the July 1st medal. This is the party's highest honor on model CPC members. We got plenty more to come. This is Bloomberg.
胡哈斯·苏莱曼, a guardian in white for the health of border residents. For over 40 years, he has made the South.
All right, we are looking at the Kospi here this morning. Continues to be in a pretty sour mood here. We're down some 3% when it comes to the gauge. It's not just the stock side of things. We're watching FX, right? 1562.20. That is the level to watch for the yuan. If we get there today, that's going to be the weakest level we've seen since 2009 for that currency. So certainly seeing a lot of pain when it comes to the FX and stock side of things here. We're kicking off basically the second half of this year with maybe the favors and the favorites and the preferences tilted away from Seoul, perhaps more towards the Taiwan side, as Anthony mentioned, and maybe even like the likes of Malaysia, as we talk about, which has been loved, I guess, with this whole AI trade. So certainly that's one thing to watch as, of course, we look at the next quarter. Meanwhile, we're talking a little bit more about what we're seeing in the AI front. Anthropic says the U.S. government has removed foreign access restrictions on its Fable 5 AI model. Now, for more, let's bring in Bloomberg's Min Lo to tell us more about the backdrop and what led to this decision.
So this came about more than a couple of weeks after the U.S. government had told Anthropic that it needs to seek U.S. permission to have foreign actors access two of its most powerful models. That's Mythos 5 and Fable 5. And then a few days ago, we reported that Anthropic had made some changes to address some of the national security concerns. And then the U.S. government then lifted some selected restrictions on Mythos 5 to vetted companies. So things like critical infrastructure providers, cyber defenders. And we're now learning that for Fable 5, the government has lifted all foreign access restrictions. And Fable 5 is the less powerful version of Mythos 5. It's meant to be public-facing and for more widespread use. So this is a major win for Anthropic and probably going to lift its valuation ahead of that IPO as well.
Yeah, could be good news for them. What about the implications? What could this have mean for some of Anthropic's Chinese rivals?
Yeah, I think they are twofold. One is that, first of all, the race is back on with the Chinese rivals because if the US continues to place these restrictions on Anthropic, then it means that any deployment of the frontier models, whether it's by Anthropic or even OpenAI and all the other US models, that deployment is going to be very limited if the restrictions are in place, right? So that hands a lot of advantage to the to the Chinese players whose prices are already much lower, and the models are often open source, so that already increased their market adoption rate. The other thing is the national security front, right? Because one of the reasons why the US is clamping down is because they are worried that foreign actors can circumvent some of these guardrails. And the question is whether or not that is secure, because the US hyperscalers have accused the Chinese ones of a process called distillation, where you generate a large amount of data to train your own AI models in a cheaper way. But this is something that Chinese Premier Li Qiang last week at the World Economic Conference had already hit back again, saying that you can't copy your way to an innovation edge. So again, it really raises a question about whether or not the new model by Anthropic could be distilled as well by these Chinese players.
Okay, very interesting. I want to switch gears because we're waiting for President Xi to go on stage to speak. This is, marking the 105th anniversary of the founding of the CCP. He doesn't really make this speech often. It's every 5 years, I believe. So what's expected, do you think?
Yeah, this is not a speech where you would watch for any policy indicators, right? It's a speech for him to really speak to the people and really inject the sense of national pride and unite the people. And here on the screen, you can see Takaichi, the fifth ranking member of the Politburo Standing Committee, speaking after he had just announced the names of these 7 awardees of the July 1st medal. That is the highest honor that the CPC can give to any party member. They are supposed to be role models. They are really exemplified for their loyalty to the party, their discipline, and their contribution. And I think it's interesting if you look at who is being awarded, right? Oftentimes they come from, the grassroots. They are village party cadres who really help to resolve a lot of conflicts, for example. There are rural doctors, for example. So these are things that really highlights what the CPC wants the people to know, that they really are about servicing the people at the center. So it's all going to be about party discipline, party loyalty. He might have maybe a couple of lines really talking about sovereignty as well, given that it is the 29th anniversary of Hong Kong handover. So he might say something about, the closer ties between mainland China and Hong Kong, the one country, two systems, maybe some warnings against these separatist forces on Taiwan as well. Yeah. Okay. Certainly one to watch. It seems Min Min Lo, our China correspondent, covering all things here today, AI, of course, and that President Xi's speech, which is set to start here moments away. We'll leave you with those live pictures, of course, of this 105th anniversary of the CCP. This is Bloomberg.
Of the Atmospheric Environment Division of the Beijing Municipal Ecology and Environment Bureau. These outstanding individuals and advanced groups commended this time are true models of their various sectors. Their exemplary story and lofty spirit vividly demonstrate
All right, in some world news this morning, U.S. Supreme Court has rejected President Trump's plan to restrict birthright citizenship, deeming it unconstitutional. The court says Trump's executive order cannot be squared with the Constitution's 14th Amendment, which guarantees citizenship to almost everyone born on U.S. soil. Trump suggested on social media that the issue could now be addressed in Congress through legislation. President Trump has reported yearly earnings of at least $1.4 billion from crypto and meme coin-related businesses. That far exceeds the income from his hotels and golf resorts, renewing concerns that he's profiting from the presidency. Trump also earned at least $26 million from new real estate ventures overseas, growing his fortune as his family embraces foreign deal-making. The World Bank is reportedly proposing to phase out its lending to China by 2031. The Financial Times says the bank's board will discuss a decision later this month. It follows years of pressure from the Trump administration and other countries to cease lending to China, reflecting its economic rise. All right, we're checking some, when it comes to Korea, there's been a lot of pressure on the Kospi here this morning. Continues to be a down arrow story, but you are seeing some pockets of bright spots here, right? Power stocks in particular here are rallying on the government's AI investment plan. So you see a pretty massive moves there on some of these power stocks. Weichai Power as well. Jefferies just raised its price target for that company in particular here. So they're talking about $44 or yuan, I should say. So still they say could be plenty of upside for that stock. We're seeing Weichai Power up some 4% here right now. We're watching copper stocks basically globally here, just given what we've been seeing. These are some of the Chinese names that we've seen. Zijin Mining, Jiangxi Copper are all heading lower. A lot of anticipation what could be expected from the Trump administration. That deadline on this decision to impose copper tariffs is underway. So we're certainly watching if President Trump makes that move. We have seen the anticipation of this be a blessing and a curse for a lot in this copper market. Some have been rushing to at least get supplies here before these tariffs go into place or the announcement. So certainly one thing to watch very closely. YTO Express as well. This is the Chinese courier. Earnings came out. We're seeing the shares limit up this morning here after the company reported prelim earnings showing its first half net profit surged at least 69%. So there you go. Certainly seeing a good reflection there in that market reaction. We have plenty more to come. This is Bloomberg. .29 a.m. in Tokyo. Japanese markets are going to that lunch break in just a moment. We are coming off some of the highs that we saw when it comes to this equity market in Tokyo here today. Topics, though, we're getting close to that 4,000 level. But yes, when it comes to dollar yen, that still remains front and center on really what's the next line in the sand for policymakers after we hit a new fresh 40-year low for the currency, 162.69. This morning. And in fact, that's despite JGB yields actually heading higher, right? Which should actually be strengthening the currency, but it hasn't of late. 270 for your JGB 10-year yield here. So we're up some 2 basis points. And this is on the back of some pretty decent data, right? Some solid numbers we got in that Tankan survey for June, especially when it came to the large manufacturing side of things here. And it seems like it is that AI boom and that demand that we're seeing that has lifted the mood among some of these large manufacturers, including the likes of chip equipment, electronic devices as well. And you got to factor in the weaker yen as well, which could potentially help the earnings of some of these exporters as well. So there you go. Pretty decent numbers coming through when it came to Japan on the eco front. You pair that with what we saw in exports in South Korea. We're talking about 70% gains here. Continues to be an up arrow story when it comes to the AI boom there in South Korea as well. But yes, let's bring it back to the BOJ, right? Board member Ayano Sato says the risk of inflation overshooting is not firmly established. It suggests she tilts towards accommodative policy as an appointee of the dovish Prime Minister Sanai Takaichi.
While we may observe some risk of inflation overshooting, I do not believe that an inflationary norm has yet become firmly established. Therefore, I want to think about this after having listened to the briefings and analyzed the data. In general, it's not desirable to have high foreign exchange volatility, but foreign exchange levels should be something determined by eco-fundamentals.
And meanwhile, Japanese Prime Minister Sanai Takaichi begins a 3-day trip to India on Wednesday, where she'll meet with her Indian counterpart, Narendra Modi. Now, to discuss everything from economic and security ties with an eye on China's growing influence. Let's bring in Yoshiaki Nahara joining us from Tokyo with what to expect from this trip.
Well, so the key word is obviously economic security, like Takaichi tried to do at the G7 summit in France, that she's going to try to align with India that, the two nations can cooperate on critical minerals such as rare earth so that, Japan doesn't need to, entirely rely on China, which is imposing a growing threat on Japan.
In terms of what could be achieved and potential deals, what are people anticipating?
Well, so that's a really good question, and honestly, this kind of talk has been going on for some time. If there's anything substantial that they can do, together, that would have happened a long time ago. But the question is that how much actually they can turn things around on the critical minerals, which is not easy at all. And it's the same challenge for other nations as well. So we may see some strong language of cooperation, but in terms of actual content on what can be achieved, it can be thin compared to the language level.
Thank you. Yoshiaki Nohara there, our Bloomberg reporter joining us out of Tokyo. What to expect from that 3-day visit for the Japan Prime Minister. A look at how Asian markets are doing as we go into that break. And certainly we continue to see that gap between Taiwan and Korea, right? TAIEX is up close to 2%. Kospi is getting to 3% losses here right now. We're actually seeing some upside when it comes to Shanghai. CSI 300 is close to that 5,000 threshold here. And the Chinex is actually underperforming here today. We have plenty more to come. This is Bloomberg. We're seeing a little bit of movement when it comes to oil prices here this morning. Brent's back to around $73 here, but we're still sub 70 for WTI. Of course, we've heard from the U.S. side of things saying that Steve Witkoff and Jared Kushner had positive talks in Doha on this Iran deal this week. So certainly that could help. But right now we're not seeing too much movement there. But yes, we got to talk about Sintra and what's been unfolding there. The ECB says the pullback in oil prices is a welcome development, but it remains focused on the indirect effects on inflation. Its chief economist, Philip Lane, told us exclusively that the ECB's June rate hike was justified and explained what has changed since.
For the economy, it's only been, a few weeks. So clearly what's changed is the oil market. And that is moving quite a bit in the weeks since we've made our decision. And so let's see how that percolates across the economy. So what we have seen is in terms of confidence indices, there has been some improvement, but not a return to the pre-war levels. So it's not the case that there's been this very rapid rethinking of how investors and consumers feel. I mean, I think probably they need to see this current peace agreement convert into something more durable. And as you know, every day there's, plus and minus signals. And that needs to settle down, I think, before consumers and investors take a more decisive revision of their views.
I mean, this is really the concern, right, is that we're not really sure what these ongoing talks will bring. Madame Lagarde yesterday was really talking about no forward guidance, but scenarios. So with these ongoing talks, are we closer to the milder scenario or base scenario?
So I think the most important fact that we see is right now the oil prices reverted to pre-war levels. But the view of the market in terms of 2027 and 2028 is that it will be well above pre-war levels. So in other words, over the next couple of years, maybe because around the world energy firms, governments will want to rebuild inventory, that maybe demand for oil for restocking purposes will keep the oil price high compared to the pre-war level. So from our point of view, it's very welcome that we see this decline in the price of oil, but in terms of the overall inflation impulse, the fact that we do have maybe for a couple of years oil prices above the pre-war level, that essentially is a cost-increasing impulse to the economy.
So it's very clear that the ECB wants everyone to know that the last hike was not an insurance hike. Will the next hike be an insurance hike?
So I think it's important that we are clear on our terminology, if you like. So as President Lagarde said last night, we feel that the June decision was a robust decision, that we looked at it from every angle, and even from the angle which we did anticipate of having, if you like, this more rapid decline in oil prices. Even under that kind of more rapid normalization, it made sense because of 4 months of high oil prices to raise the rate from 2 to 2.25. What I think is important to say is as we go forward, as we evaluate the kind of pros and cons of different rate decisions, we will be, if you like, mainstreaming the concept of how does this decision look like under uncertainty. Yeah. Now, for me, I would reserve the phrase insurance hike to a situation where there's a tiebreaker. That maybe you could stay where you are, maybe you could hike, and the risk considerations will push in one direction. But that was not the June decision. That was a clear decision, robust across a wide range of scenarios.
Yeah, I mean, given the wide range of scenarios and the uncertainty and the second round effects, is it better to hike in July or September?
Well, again, the way you phrase that question is maybe overly narrow. So what I would say is, before we get to the second round, I mean, for me, the second round effect is probably going to take some time. What I'm really focused on is the indirect effects. So even though now, like fuel prices are falling, what we need to look at is how the 4 months of energy cost increases percolate into food inflation and into services inflation in particular. And that channel is maybe where there's still uncertainty. And it's essentially the tension between these many firms have been absorbing higher cost increases for a number of months. Whether they can recover those cost increases by raising prices, or whether, especially in the context of now the fuel prices reversing, it's absorbed in profit margins and there's less by way of the indirect effect. And only after that can you start to have a vision of how strong the second round effects on wages might be, which will be later this year and into next year.
So you're telling me my question is too narrow because you could not hike at all?
I think, as you very well know, we're very much committed to basically going one meeting at a time, to not boxing ourselves in by kind of speculating about rate decisions, and essentially focusing on, at the time of the meeting, when we look at everything, what makes sense.
That was ECB Chief Economist Philip Lane there speaking to Francine Lacqua at the Sintra event. Let's bring you back straight to those live pictures in Beijing where Chinese President Xi Jinping is giving that speech as the country marks the 105th anniversary of the CCP. Let's listen in.
Today, the Chinese people, with their destiny firmly in their own hands, are striding toward a better future with confidence, self-reliance, and strength. 105 years of unremitting efforts have blazed a right path toward the great rejuvenation of the Chinese nation. In the great practice during revolution, construction, reform, and the new era, the party has led the people in overcoming great hardships, successfully blazed and upheld the path of socialism with Chinese characteristics, completed in just a few dozens of years the process of industrialization that took developed countries several hundred years, and created the two miracles of rapid economic development and long-term social stability. Today, the great rejuvenation of the Chinese nation is showing an unstoppable momentum and a bright prospect like never before. 105 years of unremitting efforts have demonstrated the strong vitality of Marxism. The party has adapted the basic tenets of Marxism to China's specific realities and to fine traditional Chinese culture. The party has kept adapting Marxism to the Chinese context and the needs of our times, and established Mao Zedong thought, Deng Xiaoping theory. The theory of three represents the scientific outlook on development and the thought on socialism with Chinese characteristics for a new era, greatly enriching and developing Marxism. Today, the vigor and vitality of the cause of socialism with Chinese characteristics has fully tested Marxism as a scientific truth and demonstrated its people-centered and practical nature, and demonstrated its open-ended nature and contemporary relevance. "105 years of unremitting efforts have profoundly influenced the history of the world. The party always stands on the right side of history and stands on the side of human progress, and with its tireless endeavor has profoundly changed the trajectory and dynamics of the world. Today, the party is leading the people in advancing Chinese modernization, creating a new form of human advancement, and expanding the pathway of developing countries toward modernization. We advocate for the building of a community with a shared future for humanity, providing Chinese wisdom, Chinese proposal, and Chinese strength for addressing major issues facing humanity. The socialist China, led by the party, is recognized as a builder of world peace, contributor to global development, and defender of international order. "105 years of unremitting efforts have forged a strong CPC. The party has stayed true to its nature, purpose, and goals as a Marxist party, carried forward its great founding spirit, remained determined, and emerged stronger through trials and tribulations. Today, the party has become the largest governing party in the world with major global influence. It has gained wholehearted endorsement and support of the people. It is the strong leadership core of the cause of socialism with Chinese characteristics, and it is truly a great, glorious, and correct party. Comrades, friends, we owe all that we have achieved over the past 105 years to the unremitting efforts of the Chinese people, led by the Chinese communists, one generation after another. Chinese communists with comrades Mao Zedong, Deng Xiaoping, Jiang Zemin, and Hu Jintao as their chief representatives, have made tremendous and historic contributions to the rejuvenation of the Chinese nation. To them, we express our highest respect. Let's take this moment to cherish the memory of comrades Mao Zedong, Zhou Enlai, Liu Shaoqi, Zhu De, Deng Xiaoping, Chen Yun, and other veteran revolutionaries, and Comrade Jiang Zemin. Let us cherish the memory of the revolutionary martyrs who bravely laid down their lives for national independence and the liberation of the people, and for prosperity of the nation and happiness of the people. Their great contributions to our country and nation will be immortalized in the annals of history, and their noble spirit will live on forever in the hearts of all Chinese people.
We're going to leave that there, but subscribers, of course, can continue watching the president's speech there at LiveGo. Plenty more and give you a market update coming up. This is Bloomberg. All right, we are checking when it comes to, I believe, chip stocks, or I believe inverter stocks first. We're taking a look at when it comes to what's going on there. So there has been this Reuters report about the U.S. preparing a ban targeting Chinese energy inverters. So that leads to some concerns here that in terms of what the U.S. is thinking, that the concerns that China could use them to disrupt power supplies. So that's why you're seeing some of these inverter stocks heading south here this morning. SunGrow power supply is down some 14.5%, although the likes of Citi is saying this new possible ban may not be a big concern for SunGrow here. So that certainly is one thing to watch there. In terms of what else we're watching, Capricorn here with an interesting sort of warning that came through from the company. So they said they continue to increase in upstream raw material prices may actually start to negatively impact its operating performance. So it could start to hurt the earnings. So that is sending some shivers, I guess, across the chip space here today. You see the likes of Capricorn Tech is lower by 4.5%. Hua Hong Semi is also seeing some moves to the downside here. So that's one thing to watch. After the shares of Capricorn more than doubled in the second quarter, we are coming off that here this morning. They also talked about the competition in AI chips has intensified. So watching maybe what happens to gross margins and the like, they say may fluctuate in the near term. Talking about Taiwan, though, this is where you still see Taiwan doing quite well, right? So Taiwan Semi is up some 3%, but the rest of the whole AI plays is doing very well here this morning, or even AI adjacent. So the likes of Acton Tech, for example, is up some 7%. But as Anthony Stevens did tell us, right, it's also the very niche sort of parts of the whole AI trade, whether it's circuit boards, whether it's like where, Taiwan certainly dominates in that field as well. So there you go. That's where we are when it comes to Taiwan. We'll leave you with these live pictures of the Great Hall of the People, where President Xi is continuing to speak this morning. This is Bloomberg.
We anxiously to fulfill the party's fundamental mission wholeheartedly serving the people.